Welcome to Golden Record, an S&P Global Market Intelligence podcast, where we discuss challenges, solutions, and hot topics in the world of corporate actions. I'm your host, Amanda Bergus, with the Managed Corporate Actions business within S&P Global Market Intelligence. For our first episode of 2023, titled SPACs, Issuances, Redemptions, and Everything in Between, we explore the life cycle of special purpose acquisition companies, their purpose, and how SPACs impact corporate actions. My guest for this episode holds over 3 decades of corporate actions experience across large investment banks, including Bank of America, Merrill Lynch, and UBS. And in 2015, we were lucky enough to have him join our very own managed corporate actions business here at S&P Global Market Intelligence. Our head of MCA operations in the U.S., Joe Pozolante, joins me to share his expertise on SPACs with our listeners. Let's jump in. Thanks for joining us, Joe.
Thank you, Amanda. Thank you for having me today.
So today we'll be talking about SPACs. And to just kind of recap what a SPAC is, the function of a SPAC is to sell shares to the public via an IPO and then purchase an operating business with those funds. If they don't acquire a business within what's typically a 2-year window, 2-year charter period, the money is then returned to investors. So that's the Wikipedia version, but can you add some layers to that for us, Joe?
Yeah, SPACs have been around for over 30 years. They started in 1993, so we're at the 30-year anniversary of SPACs in the United States. Some of the other countries, as like Korea's been doing them since 2009, so 14 years they're doing them. And the European markets have been doing them since, from what I've seen, about 2015, 2016. When these SPACs first were coming out and got really popular about 10 years back, it was very prestigious for them to have a former CEO of a public company, mutual fund, hedge fund, or money manager, high-profile money managers that would run these companies, and people would, take faith in those type of individuals running these companies to say, "Hey, this is going to be a good deal. They're going to make good on it," and people would invest in them just for that reason. So it's, these days, I believe that it just gave away to sheer volume, that so many SPACs were created that you can't have a money manager or a CEO from a public company running every single one. But they're usually people in the industry for a long, long time. And so it's interesting to see how they're born and how they carry on today, for sure. Yeah.
Where we really started to see a SPAC craze was in 2020, 2021, particularly 2021, when 640 SPACs IPO'd globally. And that's more than 2020, 22, and 2023 combined. So that's a lot. That was a big year for SPACs, but it seems like what was historically more popular in the US has gained momentum in other regions as well, with the UK and Singapore Stock Exchange announcing their SPAC framework in 2021. And then in early 2022, we saw UAE get on board. What are your thoughts around that global expansion specific to the past couple of years?
Yeah, I mean, I definitely agree. There was an explosion in that 2020 to 2021 period. I was looking at some statistics the other day, and they were saying in 2016, there was about $3.5 billion that IPO'd on SPACs. And in, 2020, in comparison, $83 billion. 2021, $162 billion
Wow.
of IPOs on SPACs. I know, it's insane. And then it started to tail off in 2022. But obviously, if there's a model that's working for investors and for sponsors that are running these SPACs to make money, it's going to trickle all over the world,
Catch on,
yeah, for sure. So Korea picked up on it long ago. So did Canada and the European markets. They all picked up on it. And I believe that some of the same, high profile people that were running the SPACs in the US were the same ones that were creating the ones in European markets, for sure. I saw some of the same names. So, it's just a product that, makes money, and they could see that. And why not try it in other countries? It's just a matter of, can they find somebody to take over? And that's become the problem these days. How many takeover targets are out there? If there's only 15, 20,000 public companies traded in the world, how many private companies are there? And if that's the case, and there's a lot more private companies, but are even worth over $50 million still, and this is where the SPACs have been targeting, no pun intended, but targeting themselves to look at these companies, valued under $100 million that are private companies, and they're running out of them.
Yeah, I just want to talk about that for just a moment. I know that what, like 99% of these SPACs are targeting private companies. Is that just because that simplifies the process of going public, or is it more about the dollars,
I think it's
or
a little
both?
both. Yeah, I
Yeah.
think it's a little both. I think, the traditional IPO does cost a lot of money for the company as far as the road shows and all the different firms they have to hire. This SPAC goes through all of that for them and does all that. No road show in particular, just a matter of getting the sponsors on board, and then they could
Mhm.
sell to the public as a SPAC. But it really becomes difficult for these private companies to then go public because they're so scrutinized and their books and records are just ripped apart. Not that the SPACs don't do that, but it could take upwards of 2 years for them, to do it. I think the quickest IPO I ever heard of was like 10 months. So, you know, once they start to engage with a SPAC, they can complete that as long as it's not a cross-border merger. They can complete that in probably less than 3 to 4 months. The complete valuation and everything of these companies coming on board with the SPAC and then doing the business combination. So, it's all a matter of saving time, saving money, but definitely it allows the private company, the valuation of a private company as opposed to a public company. It's easy to say it on a public company because the analysts are all in there picking it apart. But for a private company, it's not always that easy to put a valuation on it. And there they are giving out private shares and restricted shares to their holders, but based on analysis that's being done probably internally in most cases
Really?
with an
Yeah.
audit. Yeah. So it's not having, 10 million eyes looking at it and analyzing their company, which sometimes is a good thing.
So, kind of shifting back to the 2020, 2021 craze, and you mentioned this earlier, but in 2022, but particularly late 2022 and early this year, 2023, we saw a very substantial decrease in new SPAC IPOs and pretty substantial uptick in voluntary redemptions and then subsequent liquidations. Now, this makes sense with the 2-year framework for all the SPACs that IPO'd in 2020, but are there other economic factors contributing to liquidated SPACs rather than successful acquisitions? And you may have already just touched on that in what you were saying previously, but what are your thoughts on that?
Yeah. Um, I had read at one point there was one of the SPACs, I forgot which one it was, but they said over the course of 18 months they interviewed over 400 companies for a potential takeover. So it just gives you an idea of how much work the insiders on the SPAC are actually doing to find companies. And there's not a lot of companies left. When you look at the Pershing Canteen, Bill Aikman's, he raised $4 billion, which was I set a record for the amount raised on the SPAC, and he couldn't find a company to take over. He wound up looking at Universal Music, which is owned by Vivendi in France, and he was just going to buy 10% of that. It wasn't all the money, all the $4 billion, obviously, but having to get creative what you're taking over and how you're doing it becomes more challenging for the sponsors and the people running the SPAC behind the scenes to say, well, what can we take over? What's left for us?
So let's shift to our world, corporate actions. I want to talk about what is actually happening from a corporate actions perspective, from the initial IPO to ultimately the acquisition or liquidation. What are we doing?
Yeah, it's a good question because it all depends who you ask, right? We see so many different variations of the event types, but from a normal SPAC that has a unit, right out of the gate, there would have to be a unit separation. At least giving investors the opportunity to detach the common and warrants. And I'm playing it on that it's a simple SPAC that exists of a unit on the IPO, a common stock, and a warrant. There's many other variations that came out, but we'll get into that too as well. But looking at it from a normal SPAC perspective of a unit, the first question is, will the unit split at the time when the common and warrants begin trading? Will it split mandatory or will it be voluntary? And we've had problems with that. We've had a couple that even the stock exchange and the depositories didn't recognize, and we recognized it from the issuer's point of view, that they said the stock will stop trading, the unit will stop trading once the shares and commons IPO. So that becomes a big problem too, is because then we're challenged with then having clients inquire with us to say, oh, you put up a mandatory unit split and nobody else is doing that. And we're like, yeah, we know. We're going after them. We're going to the SPAC. We're going to the depositories. We're going to the stock exchanges. There was a few. We had to bring everybody together and get it done, which is all good. We like to help the industry in that capacity. But so it's the unit split that usually typically comes out, right? Whether it be mandatory or voluntary. And that unit split gives us the opportunity to explain the SPAC, right? Give all the details about the SPAC, inclusive of the initial prospectus. So it gives us something to hang on to. For clients to hang on to say, okay, I understand the SPAC now, I know where it's going. Then we started to see some SPACs probably about 3 years ago that were just common stock. And we had nowhere to speak to what the SPAC was other than the listing of the security, which is an event for us as well. But it wasn't a good place to put that information. So we kind of just had to dress it up with the reference data and make sure people saw that. I believe we were one of the first firms to actually create our own reference data for SPACs, asset class and asset type, around the specialized acquisition companies. It helped us a lot. Because then we were able to pull statistics and metrics at any given moment because we defined those securities to be a SPAC security. It really helped us. Yeah, it was a great piece that we did. After that, what occurs, and I know a lot of people, I shouldn't say people, a lot of vendors try to send in warrant exercises on the warrants, or even if there's rights involved, they try to send right subscriptions. We've seen conversion events. We've seen every type of an event type you could think of comes in on SPAC, especially when it got hot like 3 years ago. But the normal pattern would be a unit split. And then thereafter, if they look for an extension, we were doing tender offers from the beginning. We called it a tender offer. We called it a self-tender, even though we felt it was a dissent, but we didn't want to go that route because tender dissents are particular to certain markets. So we went with a self-tender, which it really is the SPAC itself buying back its own shares in 99% of the cases. So when there's an extension or a business combination and holders are given the opportunity to redeem, we put up a tender offer, a voluntary tender. The other event types towards the end, when they do find a business combination and they do find a company to take over, we do them as mergers. We do it as mergers on the commons, the warrants, the rights, if they exist. And then the units get a mandatory security separation as it is, because it's technically the units, if they're not producing a new unit, which is very rare on the DSPAC side, we'll definitely do a mandatory security separation because you're just separating it to the components. And outside of that, liquidations take place, mandatory liquidations, and worthless events on the warrants and rights when they liquidate. You mentioned earlier that you had so many liquidations towards the end of the year. And it was in November and December of 2022, we did more liquidations at that point for those 6-week period, the last 2 weeks of November and the full month of December. For that 6 weeks, we did, I believe, more liquidations than we had ever done on SPACs due to the volumes that were created in 2021 and the SPACs being on mostly on a 2-year charter. With the liquidations, what we were seeing was, and it started to get a little confusing in mid-December with that, a lot of them were looking for extensions. But then there was also ones just doing charter amendments that they were pulling back their charter expirations from, say, May, June, July of 2023 to December of 2022. And
they're like, we give up.
Yeah, exactly.
All right. So I want to get back to something you said a few minutes ago. You said, typically we have these kind of vanilla, quote unquote, SPACs that are comprised of a unit or that start with a unit that are comprised of a common share and a warrant. What about some trickier SPACs that are more complex than that? I know a couple have popped up on my radar recently, but do you have an interesting one you can talk about?
Yeah, there are a few that are out there, and why they become interesting to us and a little more complicated is because we're finding more and more SPACs are taking over companies that are actually public companies. And when that's the case, so we've had one recently with Mount Rainier Acquisition Corp. Taking over Hub's Cybersecurity's Israeli firm, an Israeli cybersecurity firm, and that company was already out there as an Israeli company, and they're switching to a NASDAQ company. So the security was already out there, and we've had to find information from the TAs in Israel to actually run the corporate action on the existing hub security shares, and then figure out the new securities that were going to come off of that. And the Israeli market, like Norway, like Ireland, becomes a little convoluted because they only change their SINs numbers. They don't change their ICE and CETLs. So a new CETL was added for the NASDAQ market, but then we had to figure out which security was actually going to be allocated off the old hub security, cyber securities. And it complicates things. Another one was this KINS technology. So they kind of did like a reverse Morris Trust, like you saw, I'm sure everybody's heard us mention the GE reverse Morris Trust from years ago. It's kind of similar because this company in Pixion actually owns this CX app is the company that they own as a subsidiary. They're spinning that off to their shareholders, but at the same time selling that company to KINS Technology, which is the SPAC. So the spinoff has already occurred, yet the merger hasn't finished up yet on the SPAC side. So the security's out there trading already as CX app, and it was spun off to these Inpixion shareholders, and that creates complications because now we have a spinoff, an active company being taken over by a SPAC, and it complicates things. And we also see this, with a few others that are going on at the moment. GX Acquisition Corp taking over NeoCorp, which is a tradable Canadian company at the time, and they're going to do a reverse split. That's what we typically see when it is a tradable company. It's usually very low priced. I don't know why, but then they run reverse splits on the old companies to bring them up to the valuation of the SPAC, which is usually around $10, and then they'll merge them. And a lot of those take place on the same day as the merger of the SPAC itself, going into the new de-SPAC shares.
Yeah, I'd say, I feel completely lost after that last little, as I think many clients are and other data providers out there, we just continue to hear this feedback from existing customers and prospects. How did you guys handle this event? We're having so much conflicting information or just data that's not even making sense. We had one pop up just the other day that got a lot of attention from multiple prospects, actually. It was the Gesher One Acquisition Corp. And I think what was unique about that one is the merger, it was a successful acquisition. And after the merger went effective, the acquired company immediately exchanged for new shares. So there was all this confusion in the marketplace about what was going effective when and what securities clients were receiving. And thankfully, we had it perfect and everything was set up correctly with the right dates and rates and resultant IDs on as soon as the information hit the market. My favorite quote came out of this scenario. Not that I'm happy that others are getting it wrong, but this is my favorite. How did you get it so right? Everyone else seems to have gotten it wrong. And I just feel like that's kind of a common thread with us when we're talking with customers about SPACs. And I think that's in large part due to the processes we've built and the SPAC team that you've created.
Yeah, and that was very nice of them to say that. I guess I don't know if they were pushing a compliment at us or just confused as to how we got it right, but either way, it's good for us. And one of the big things that we also do, because we manage our own reference data, we're looking for the reference data on these new securities from day one. As soon as they say, hey, this is a company we have targeted, we're going to take over, before there's even a meeting date, we're looking for the reference data because we have the accessibility through different portals to see, what's out there, what's being created before it's even begun trading and has a CETL. And we provide that to clients. And I think that when we're doing that, initially 2 years ago, we've been doing it for 5-6 years now. Clients were coming to us, where are you getting these ISINs from? Where are you getting these CUSIPs from? How did you know about this? They stopped asking because we kept saying, this is the new company, and they're like, where is it coming from? So, because they're not hearing from anywhere else. Doing the SPACs the way we've been doing them for the last 5 years has made me look at the way we do every other event type differently, because the team that we've created to do SPACs, we purposely make them look at it from the eyes of the investor. You could say that a million times to people that do this work. Okay, let me walk this through and figure out exactly what I need to do so clients will understand it the way that it's meant to from the issuer's perspective. And we've been doing that for a lot of the different event types, even outside of SPACs. That's our voluntary world. Our voluntary team does exactly that. I am the investor. Let me see what my options are and then provide that back to a proper event. And the SPAC team has really picked up on that. And I'm so happy we did that 5 years ago, because even I didn't know, nobody knew how crazy it was going to get. And our process is pretty smooth, and it's there and it's written, even though it keeps evolving in different ways. But yeah, it's definitely worked out really good for us.
Yeah, and our clients.
And our client, well, if it's working out good for us, it's working out good for our clients, I'm pretty sure.
So based on what you've seen over the past few years, and you spoke earlier about the massive amount of liquidations in late 2022, what do you think we can look forward to in 2023 with SPACs? I mean, what's your best guess?
Well, definitely the slowdown of the creation of SPACs, because there's still, 100 every month that are expiring their charters,
Now,
going
is
forward.
that global, or you're talking just US?
Mostly U.S.
Okay.
U.S. that we see. A lot of the global ones have finished their business combinations or have liquidated, and we don't see them creating a lot in the global markets outside of Korea. I think another thing that's worth mentioning is, over the course of the pandemic, there was a lot of and again, not to place blame on the pandemic, everybody's so easy to do that, but it was during that time period that a lot of the SPACs started to offer sweeteners, where they were saying, hey, if you don't do the redemption when it comes time for the business combination, we will give you extra shares. We will give you extra money. We will give you some warrants. And it got, they were actually starting, again, I think it was Bill Akerman's SPAC, the Pershing Tontine, that really brought light to that, where he said, we're not going to make money as the founders of this until you make money. We're going to set milestones on the stock price, on how it's treated afterwards, and until we reach those milestones, even though it's just a segment of Universal Music, which is an existing business, he still wanted to make sure that they reached the milestones as a management team on the de-SPAC shares, to then say, okay, now it's time for us to take our profit, whatever we made as the founders of the SPAC, not immediately upon the business combination, because so many of them were just making their money, walking away. These sweeteners became a lot. That's where the rights got involved, when people started to see rights. And again, those rights, we were getting a lot of rights subscription events on the back of them from vendors. Truly, it's just the right to get a fraction of a de-SPAC share. That's all it means. But they were sweeteners, and the sweeteners are all over the place now as far as what more can you get. I saw one the other day, they paid 1.66 shares, 1.665 shares instead of 1-for-1, just to reward the holders that held out. So it's really interesting how they're getting very creative, and I think we're going to see more of these creative SPACs come out. So I think they're going to be creative with the sweeteners, and I think they're going to get creative with how the founders get paid.
Well, thank you, Joe, so much for your time. And if anyone out there listening wants to continue the conversation, we've got a whole team of SPAC experts that we can get you in touch with. So reach out to us if you want to hear more.
Thank you, Amanda.
Thank you for listening to this month's episode of Golden Record. What would you like to hear us talk about next time? If you have an idea, please write to us at goldenrecord@spglobal.com. I'm your host, Amanda Bergus. Until next time, keep listening.